Today I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made a 73% win rate within 7 months. I recently discovered the strategy as it uses 3 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000 with a 1 to 1.8 risk-reward ratio. If you want to know the backtesting service I'm using, then it is called Trading Rush. And it's officially the best to practice with and absolutely free to use. You can also find important lessons on the app or on their website. It is easy to use and also safe. Thousands of new and professional traders make use of the app. Without further ado, let's quickly jump into the strategy for the day. This is the Euro-United States dollars pair, and we are on the 5 minutes time frame. So let's get into our trading strategy. The first indicator on our list will be the average true range. This is a perfect indicator. It's probably the number 1 indicator that you should have in your trading system. So the next indicator is the SSL channel. This one right here by Miss Tricky, and the last indicator will be the volume oscillator. So this is what our chart would look like. For the strategy, we won't be changing any of its setting as they work perfectly fine on their default setting. We wouldn't want to spoil anything. And like I said, it is super easy to understand and beginner friendly. Let's quickly go over what this indicators will be doing before we go down with the strategy. So for the SSL channel, this is probably one of my favorite indicators, as it shows what direction the market is heading to. And let me explain to you how this indicator actually works. As you can see, there's 2 lines, green and red. And whenever you see a red above green, this is a bearish signal and is a signal to sell. Whenever you see green above red, this is a bullish signal. Very simple. Of course you can tweak this indicator because at the moment the settings are not ideal. Okay, so this indicator works pretty well. It gives you a really good trade here. As you can see that the buy and sell label clearly shows when you should enter a trade. Now this is what you should actually do. We are going to remove the buy and sell label, because that is not only what would be determining our trade entry. Go ahead and bring up the setting panel. Then untick this buy and sell label and click OK. As you can see, they are off the chart. Keep watching as I would reveal the best and most efficient way to use this indicator for the strategy. Now for the ATR, I know a lot of you know what the ATR does, but for those still starting out trading, this indicator is based on average true range of a commodity. It calculates the average range of price in a given time. The current settings is at 14. So it would always tell us the range at which the last 14 candlestick has traded. If you do not consider this, you can put a stop loss somewhere close to the price. And you know that the price looks kind of volatile, right? You put the stop loss close to the entry and you get stopped out. You pretty much lose the trade. Because you're really bad at money management. You're really bad at reading these indicators. Or maybe you don't even know about this indicators. You're just placing your stop loss based on support and resistance. You know, people do that as well. So that is a huge mistake. This indicator needs to be taken into account because, as I said, you can figure out the distance between the entry price and your stop loss based on this indicator. So for the volume oscillator, this indicator is designed to determine the amount of volume trading in the market. It serves as a volatility indicator, as it would tell us when to enter a trade based on its volatility. So whenever you see this blue line below 0, there's no volume and the price is moving sideways. You don't want to be entering the trade when the price is moving sideways, because it's very unpredictable, and you're not going to win most of the times. So you want to enter the trade when you actually see the volume, just like here. So that's it. Now the major question a lot of you have been waiting to hear. How does this strategy work? Now make sure you understand this so you wouldn't mess up your account. For a buy signal to be valid, we need to have the SSL channel colored in green. And price action has to cross and close above the moving average. And lastly, our volume has to be above the 0 line. We will then go ahead and place a buy order at the top of the trigger candle. Our stop loss would be 2 times the value of the ATR. And our take profit would be 1 is to 1.8 risk to reward ratio. Now the extra entry tip is this. We would want to see the price retrace back to the SSL channel. And we would wait for the next candlestick to break out of the channel and close in the direction of the SSL channel. And also, we would want to see our volume indicator above the 0 line before we go ahead and place a buy trade. We would also be using the 1.8 risk to reward ratio, as our stop loss would be 2 times the value of the ATR. Please, if you are enjoying the content, do leave a like and subscribe if you haven't done that, as it motivates us to drop more strategies for free. Back to the video. Exactly as the opposite for a sell trade. For a sell position to be valid, we need to have the SSL channel colored in red, and price action has to cross and close below the moving average. And lastly, our volume has to be above the zero line. We will then go ahead and place a sell order at the bottom of the trigger candle. Our stop loss would be 2 times the value of the ATR, and our take profit would be 1:1.8 risk to reward ratio. Also, the extra entry tip remains the same. We would want to see the price retrace back to the SSL channel, and we would wait for the next candlestick to break out and close in the direction of the SSL channel, and also, we would want to see our volume indicator above the zero line before we go ahead and place a sell trade. We would also be using the 1.8 risk to reward ratio, as our stop loss would be 2 times the value of the ATR. Please note that you should never trade when the volume oscillator is below the zero line, as it is showing when the market is dead, and most likely indicate a ranging market as we see here. You can see that it saved us from a lot of losing trades, so you wouldn't like to be in the market when things like this happen. Also note that we only take trades at the beginning of the first 2 candlesticks, if and only when the volume oscillator is yet to be above the zero line. If the volume doesn't meet up on the second candlestick, then leave the setup and wait for a new setup to form. Probably a new candlestick breakout. So let's go ahead and do some live examples before we move to our back testing. Okay, we see that right here, we had our breakout as price closed below the SSL channel, and we can see there is still enough volume in our indicator. So we would go ahead and open a trade, then set our stop loss at 2 times the ATR value, as we set our take profit at 1.8 times the risk. We can see this was a smooth trade. Okay, this is another trade we would have taken. So we see that our first trigger candlestick was right here, but the volume indicator does not agree with the trade, so we waited for the next and final trigger candlestick that got our volume indicator above the zero line, as we would be placing a buy order at the top of this candlestick with our stop loss and take profit levels, and we see how smooth it went also. Okay, so let's do one more example before we start with our back test. So we see that the price retraced to the SSL channel before it break out in the direction of the trend. We would be placing our buy order here and our stop loss using the ATR. You can see how good this strategy is. You can also see how good the volume indicator is doing in eliminating bad trades. So let's go ahead and start our back test. So we just finished the back testing for this strategy, and we can see that the results are amazing. We had a win rate of 73% in 200 back tested trades, having won 147 trades and lost 53, which made us 211% return on investment. And I found those wonderful trade setups within 7 months, although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the back test. So you definitely want to expect that number to be lower when trading life. The profit factor for this strategy is looking good, I guess. And we had 11 wins in a row against 5 losses in a row. So yeah, I'm definitely happy with these results. Okay, traders, that's it for today. Thanks for watching, and see you in the next one.